Chapter number 1, Activity-Based Costing. Under the traditional approach to costing, overhead expenditure is said to be connected to the volume of production activity, whereas under activity-based costing, ABC, it says that is incorrect. It states that units do not generate cost. It is activities that the business undertake that generate costings. Therefore, under ABC, we link overhead costs to the product or services that cause them by absorbing overhead costs on the basis of activities that drive those costs, rather than the basis of our production volume, the number of units we produce. Before I go into the step-by-step approach to ABC, there are a couple of definitions that I need you to learn for this exam. First definition is known as a cost pool. A cost pool is an activity that consumes resources for which overhead costs are identified and allocated. For each cost pool, there will always be a cost driver. To give you an example of cost pools, it may be something like material handling costs, setup costs. We would then look at what is the cost driver for that pool, i.e. what is increasing or decreasing the level of that cost. What is the activity that consumes resources or a factor influencing the level of costs? So if I go back to my original example where I had setup costs as a cost pool, the likelihood is, in terms of the cost driver, we would be looking at the number of times we need to set the machine up. Materials handling as a cost pool, we may be looking at the number of orders we place with suppliers for our raw materials. When thinking about ABC questions, there is a very methodical step-by-step approach. Step 1, you allocate and apportion the company's overheads to cost pools. This is the same as what you would do under traditional costing, but now it's activities. So it is an activity that consumes the resource, not just centres of the business. Again, you will use apportionment bases to spread those company-wide overheads. Step number 2, for each cost pool, you are now going to identify the cost driver. The item, the factor that is influencing the level of cost within that pool. Step 3, you are going to calculate a cost driver rate for each activity. If you think about traditional costing, this is the same as what's known as your overhead absorption rate, your OAR. However, this time it will be calculated by doing the budgeted overhead for the cost pool divided by the budgeted driver for that cost pool. Step number 4, you absorb the activity costs into the product. And step 5, you can now calculate the full production cost per unit. As the business will be undertaking a number of different activities, this is normally a more lengthy process than what traditional costing would be. Therefore, to implement, it tends to be a lot more costly. If you turn for me now into your session notes and turn to chapter number 1, we're going to have a look at example number 1. So example number 1 says, what would be the overheads per unit if the following were used as a base? A, the number of units of production. B, the number of setups. So A is referring to an absorption costing approach, a traditional approach, whereas B, if we were to use number of setups, we're looking at an activity-based cost route. The following products are budgeted for production over the forthcoming period. So you have product X, Y, and Z. You're given the production level, number of setups required, and then the budgeted overhead of 70,000. Setups are required at the end of the production run to make the machine serviceable for the next run. So if we look at the traditional approach first, so component A, and we look at using the total number of units of production. If we're taking into account the traditional approach, we will use an overhead absorption rate. An overhead absorption rate is always based on your total budgeted production overhead, and you are going to divide that by the total budgeted production units. In this example, we have been told the total overhead for setups is 70,000, and our production units, you are told that for X we are going to produce 100 units, for Y we will produce 500, and for Z we will produce 800 units. You will divide the cost of 70,000 by the budgeted production. That gives me £50 or $50 per unit using a traditional approach. However, we're looking at ABC now. So under B, you are asked to produce it based on the total number of setups. What this means is for ABC, you calculate an overhead absorption rate still. However, you are going to calculate the overhead absorption rate for every activity in the business. So you are still going to calculate that by taking your total budgeted production overhead. However, in this example, we are just purely going to be looking at setups. And you are going to divide that by the total budgeted driver. That budgeted driver for the costs we incur for setups will likely be the number of setups that is required. In terms of the question, total number of setups, you are told that number of setups required for X was 10. We are going to add Y, 20. And then finally for Z, we will need 40. So 70 setups will be required. So when we come to actually calculate our overhead absorption rate, or OAR, we will work it out by taking the budgeted overhead of 70,000, dividing it by the budgeted number of setups, 70. And what that does is it gives us an amount of 1,000. That 1,000 is not based on a per unit basis, it's based on a per setup basis. Okay. Therefore, what we need to do is we now need to then absorb the activity cost into the product. You have in this example 3 products, X, Y, and Z. So what we're going to do is we're going to look at, well, what are we producing? So production budgeted for the period was 100 of X, 500 of Y, 800 of Z. I will then take down the number of setups required, 10, 20, and 40. And I'm going to work out what is the setup per unit. So 0.1, 0.04, and 0.05 of a setup for each unit. Final thing I am going to do is I'm going to now absorb into my unit of product and service. And again, I do it for each unit. So for X, it will be the 0.10 times by the cost per setup of 1,000. So £100 will be included in the cost card for X for setup overhead per unit. Y, we will take 0.04 and again apply it to that cost per unit of 1,000. £40. And then finally Z, 0.05 times cost per unit of 1,000. 50. As you can see, if you use the traditional method, it doesn't matter what unit of product we are producing, you would include 50 for every product. Whereas using an ABC approach, you will see that we're actually allocating it to the product based on how much of that activity it undertakes. It is a fairer method to spread the cost and will help us understand the true price of our products. The fact we understand the true price of our product better can lead to competitive advantage against our direct competitors. What does that mean? It means we may be acquiring or developing an attribute or a combination of attributes of which will allow us to outperform our competitors. That may be on the price that we charge, or it may be that we're able to now invest in new technology to become more efficient and reduce our costs because we understand the costs that are driving them. However, there is always a cost associated with applying a costing method. With ABC, it is a significant, lengthy process that the business needs to go through. They will need to work out an overhead absorption rate and apply it to its product for every activity the business undertakes. Therefore, the business really needs to look at doing a cost-benefit analysis to understand whether it would be appropriate to implement it. And the final point really is that everything goes back to our basic cost behaviour. It either is variable, it varies in line with production, or it's fixed for the period. Management are not able to do anything in the short term with that overhead. However, some of the real positive things about ABC, number one, it means that we have a more accurate cost per unit. If we have a more accurate cost per unit, it means that our pricing strategy can be more effective within the market. Our decision making on pricing and costs will be improved because we have better insight into what is driving that cost. It focuses management attention on activities that drive costs. There is a direct correlation there. If management reduce the amount of activities undertaken by the business, then there will be a reduction in the company's overheads. Management will also be able to understand behaviours of cost. That will lead to better planning in future. That could even mean better budgets being put in place and ultimately more effective decisions being taken, specifically with regard to pricing and changing of costs. And it applies to all overhead costs, not just production overheads. Therefore, if a business is implementing ABC, they should cover all their costs and make a profit. However, there are some disadvantages to implementing ABC. One of the main factors is that it doesn't change the underlying profit figure. What that means is we are not changing the amount of overheads incurred by the company. We're just changing how we absorb them into a unit of product. In the long run, because of better decision making, it could have an impact on the bottom line, but not in the immediate future. We are still using an overhead absorption rate. An overhead absorption rate is notorious because it's based on budgeted overhead within our cost pool divided by the budgeted driver of that cost pool. They will not always be 100% accurate. And ultimately, if we change our activities or our cost drivers, it will ultimately change the end result, the amount that is being included in the price of a unit. So it can be open to manipulation. What we're going to do now is going to look at a more detailed example within your session notes. So chapter 1 still, example number 2. Please make a note, example number 2, trim lake, is a very good example of a longer form section C question that could come up within this area. So example number 2, first of all, we have component A. You are required to calculate the cost per unit for each product using absorption costing. 4 marks. Using absorption costing is the traditional method. To working out a cost per unit. Requirement B asks you to calculate it based on ABC, and then finally to start to think about some comments on it. So starting with A, Trim Lake Limited makes 3 main products using broadly the same production methods and equipment for each. A conventional product costing system is used at present, although an activity-based costing ABC system is being considered. Details of 3 products for a typical period are, so you're given the hours per unit using labour or machine, you're given the materials per unit, as well as the number of units for product X, Y, and Z. Direct labour costs are $6 per hour. Production overheads are absorbed on a machine hour basis. The rate for the period is $28 per machine hour. Trim Lake sets its price based on the production cost plus a 20% markup. If we start with our bog standard cost card, so I'm going to take down our 3 units that we produce, X, Y, and Z. We start in our cost card with our direct costs. So direct labour, first of all. You are told within the question direct labour costs $6 per hour. So in our cost card, $6 labour hours per unit. So for product X, it is half an hour. For product Y, you are told it is 1.5 hours. And then finally, for product Z, you are told that we use $6 per hour for 1 hour. Unless you're told otherwise within these questions, I would always go to 2 decimal places. After I've dealt with direct labour, the next thing I'll look for is direct materials. Direct materials, you are provided with the materials per unit. So very simply, you can pull that straight from the cost card. So 20 per unit for X, 12 for Y, 25 for Z. The only other thing that comes into our cost card under the direct cost, the total prime cost, is direct other, or also referred to as direct expenses. Within this question, there are none. Nothing is told to us. So what we can do is we can cast down the total of our direct costs and show the total prime cost per unit. The total prime cost per unit is very simply the total of our direct costs. So again, another management accounting term that you've learned previously within your studies. You then are given information on production overheads. You are told that production overheads are absorbed on a machine hour basis. The rate for the period is $28 per machine hour. So I'm going to now deal with my production overhead. And again, exactly the same as I did with my labour, I will take my absorption rate of $28, but this time I apply it based on the machine hours. In your cost card, X, you are told is 1.5 machine hours. You are then told Y uses 1 machine hour. And then finally, Z, $28 times by 3 machine hours. Based on the information within the question, that is all the costs now dealt with. I can now total up my total cost per unit for X, Y, and Z. So take the total of my prime cost and add on my total production overhead. That comes out with a cost per unit of $65 for X, $49 for Y, and $115 for Z. It says to you though, Trim Lake sets its price based on the production cost plus a 20% markup. So we can now work out our sales price per unit. We have a 20% markup. In a markup environment, that means our cost of sales represents 100%. So we will very simply take 20% of our cost. So that means the amount of profit will be $13 for X, $9.80 for Y, $23 for Z. And we now have our sales price per unit when you cast your cost plus the profit. However, the question then goes on to tell you, further analysis shows the total of the production overheads can be divided as follows. The following total activity volumes are associated with the product line for the period as a whole. And then you are required, B, calculate the cost per unit for each product using ABC principles. So what we're going to look at is component B now, or activity-based costing, cost per unit. If we look at ABC approach, we still have same three products, X, Y, and Z. ABC is just another manner in which we absorb our overhead costs. Therefore, our prime costs remain the same. We will still include the same labour costings, and we will still include the same direct materials costings. So I have pulled them straight down from the previous component of the question. So total prime costs $23, $21 and $31 respectively. What we're going to do now is we're going to look at how we go about absorbing the costs per unit. And these are the overhead costs. So you are told our total production overheads can be divided. What we need to work out though is what is our total production overhead. So I'm going to leave some space and I'm going to create a working. Total overheads. You are told within the question that overheads are absorbed based on $28 per machine hour. Remember, OAR, overhead absorption rate, is equal to your total budgeted production overhead divide by your total budgeted driver. In this question, that is machine hours. What I'm going to do is I'm going to manipulate that equation to get the total budgeted overhead. So what that means is overhead absorption rate So what I'm going to do is I'm going to look to manipulate. So what I'm going to do is I'm going to manipulate that equation to get the total budgeted production overhead. To get production overhead on its own, I take the budgeted driver and I move it to the left-hand side of the equation. So OAR times by total budgeted driver, which is our machine hours, must be equal to my total budgeted production overhead. Have I been given my budgeted machine hours? No, I haven't. However, I've been given budgeted production and I've been given the number of hours I expect to use per unit. So X, Y, and Z, I can work out what is my budgeted machine hours. So taking down production units from the question, first of all, 750, 1,250 and 7,000. I will then take down the machine hours per unit. Machine hours per unit comes in at 1.5, 1 and 3. And I will, to work out the total machine hours times the production by the per unit number of hours. I'm interested in the total, so I will cast each of the product's machine hours that is required. And that means I need 23,375 machine hours. So using the manipulated equation from above, OAR is $28 times by my budgeted machine hours of 23,375 must be equal to my budgeted production overhead. So my budgeted overhead comes in at £654,500. I'm going to keep going with some workings. So working number 2, I am now going to actually split that overhead cost down per activity. You have been given information based on the number of activities. You are provided with 4 activities that drive the company's overheads. Setups, machinery, materials handling, and finally, inspections. And you are told the percentage of each that are applied. So further analysis shows that the total production overheads can be divided as follows. 35% is for setups, 20% is for machinery, materials handling 15%, and finally inspections 30%. And I am going to apply each of those percentages to the overhead that I worked out in total, 654,500. If I need to do something like this, I would always, once I've done the maths, cast it down just to ensure that I have split the cost appropriately and correctly. So I now know how much overheads sit in each of my cost pools. I now need to look at what drives each of those cost pools. So I'm going to look at each one individually. So working number 3, I'm going to work out what is my cost per unit for setups, first of all. And that means I'm going to look at producing an overhead absorption rate, but that is going to be based on the total budgeted activity overhead divided by the total budgeted activity driver. Based on the information provided, we are looking at a cost pool of setups. You are provided with number of setups, number of movements of material, number of inspections. So the driver for setups will be the number of setups. And again, I am going to look on a per product basis. So X, Y, and Z. I am going to look to apportion the overhead to each product. So my total overhead for setups is 229,075. I am going to divide that by the total number of setups the business uses. So from the information provided, that is 670, and I'm going to apply 75 of that to product X. So 25,642, so about 72. And I'm going to do the same again. Divide the overhead for the cost pool by the total number of setups times it by the number of setups needed for product Y. $39,318.84. And again, final time, I will do it for the final product. So total overhead, divide it by my number of setups, times it by the number of setups needed for product Z. And again, similar to what we've done previously, I would always just very quickly double check that I have split the cost down correctly. So it comes out exactly with the same amount of overhead I've apportioned to setups. I can then take the number of production units I am going to produce for each of my products, 750 for X, 1,250 for Y, 7,000 for Z. And I will work out a setup cost per unit. The setup cost per unit will be the amount of overhead I've apportioned divided by the production units. And again, I would work to 2 decimal places unless you are told otherwise. Once I've got my cost per unit, I will then move up to my cost card that I started with originally, and I can now include the amount in my cost card. So cost per unit for setups. If this comes up in a bigger question, as I am doing here, I would cross-reference to the working that I've done, where your marker will find the information you have done to calculate the number you are including. So 34.19, 31.46 and 23.44. And we replicate that working. So the same working is done again, however it's done for the next activity. So working number 4, we will look at a cost per unit, but this time it will be for the machinery cost pool. So thinking about the machinery cost pool, again, we're going to work out an OAR, or budgeted activity overhead, divide it by our driver. What is driving the machinery cost out of the information provided? So within the question, you're given labour hours, machine hours, materials per unit, the number of units, number of setups, number of movements of material, number of inspections. So based on the information provided, I would probably say it's the number of machine hours, the amount the products are being used on those machines. And again, exactly the same as you did previously, you are going to apportion the overhead to each product. So you calculated that for machinery, the overhead was 130,900. And you're going to divide that by your total machine hours. You've already worked out machine hours within working number 1. So 23,375. And then I will times it by the hours for, first of all, product X, 1,125. $6,300. And I replicate it. So I do the same for Y. Total overhead for machinery, divide it by my machine hours, times it by the total hours for Y. $7,000. And then finally, same again for Z. 130,900, divide it by my total machine hours of 23,375, times it by the total machine hours used for Y, and that was 21,000. 117,600. I will again cast down those numbers, just make sure it's the total overhead that has been allocated, and it is. Once I've done that, I will take down my production units and I will work out a machinery cost per unit by simply taking the overhead I've apportioned to the product and dividing it by my production units. And I keep going. I keep replicating it. Once I have each of them, I will include it within my cost card. So cost per unit for machinery. Again, cross-reference to your working number 4, and that has come in as 840, 560 and 1680. If you feel comfortable with what's been done, please pause the recording here and have a go at the final 2 activity pools. Working number 5 now. Working number 5 is going to be a cost per unit, but it's going to be a cost per unit for materials handling. Again, I'm going to work out an OAR based on that activity. And again, I'm going to think about what drives that activity. In this question, the driver is likely going to be movement of materials. So again, based on each of the products, you are going to apportion the overhead to each product. You worked out that the overhead for materials handling was 98,175. I will divide that by the total number of movements of material, 120, times it by the movements of material for product X, 12. And I will replicate that working for each product. Divide by 120 times by 21 for Y. Divide by 120 times by 87 for Z. And I have apportioned the cost correctly. The 98,175 has been split. Again, I will take down the production units per product and I will work out our materials handling cost per unit by simply taking the overhead I have allocated and dividing it by the production units. Once I have that up into my cost card, I can now include my cost per unit for materials handling. And again, please cross-reference to your working. Working number 5. Final one I'm going to look at doing is my cost per unit, and this is for inspections. And that will be working number 6. Remember, the way you lay out your answer, it needs to be clear and concise so that any marker is able to follow it and know what you're doing. So again, I'm going to work out what is my OAR for inspections. What out of the information would be the driver? It will be the number of inspections. So again, apportion the overhead that you've worked out for inspections to each unit, X, Y, and Z. So the total overhead that I had was 196,350. I'm going to divide that by the total number of inspections, which is 1,000, and times it by the number of inspections for each unit. X will be times by 150, Y will be times by 180, and finally Z will be times by 670. Again, I'm going to just cast that down very quickly just to make sure I have split the cost appropriately, which I have. I will take down the number of production units to work out an inspections cost per unit. I can now go up and finally include within my cost card the cost per unit I have worked out for inspections. 39.27, 28.27, and then finally 18.79. When I cast down, I will get my total cost per unit. That is after working out an overhead absorption rate for every activity the business undertakes. So it is a lengthy process. Once I have the total cost per unit, I will apply my markup of 20%, which is 20% of the cost to produce. And that will then give me my sales price per unit. Sales price per unit comes in at 141.54, 120.08 for Y, and then finally for Z, 120.25. The question then, so part C of the question, turns around and says to you to comment on the reasons for any differences in the costs and the price in answers to A and B. So part C to finish up. Reasons for differences. First of all, I would suggest that you would take down the cost price or the price, sales price, per unit. So absorption sales price and ABC sales price per unit. So we can see very clearly what our comparison is. So under absorption, so right back to the start where we began, we came out with sales price of 78. $58, $80 and $138. Whereas if we go back and we find our ABC that we've just completed, we've got very different sales prices for each of those units. $141.54, $120.08 and $120.25 respectively. What's happened here? Well, if we look at this, if we think about X and Y straight away, X and Y would be underpriced. If we were using absorption costing, we would have priced it at $78 and $58.80. What does that mean? Well, potentially we would have made higher sales. However, if we have got higher sales, we may be in a situation whereby we're not covering our costs. We are not able to meet customer demand. Why? Because we haven't priced our product right. We will have a situation where we have a stock out, and in a stock out, cost to obtain new materials increase, which will remove our profit margin. If we cannot meet demand, customer loyalty may be lost. They may go elsewhere. You could link some comments to competitor pricing. We may be in a situation whereby we would not be pricing effectively and in competition with our competitors. Specifically there, product Z. Because under absorption costing, product Z would have been priced significantly higher. Therefore, it may have been seen by customers as being overpriced. We'd make no sales. We may not have understood that it was down to the cost per unit. Therefore, the business may invest in marketing expenditure when it isn't actually required, because it hasn't been priced effectively. So, as you can see, ABC costing takes significant amount of time to implement because you are having to work out an overhead absorption rate based on per activity. It can be very lengthy, so the business will need to work out whether it is appropriate to undertake it, but it does mean we will understand our products, our cost behaviour in a lot more detail and effectively price it right straight away. That leads me to the end of chapter number 1. Please ensure you log on to my MPES and complete the homework questions, making sure you're comfortable with everything we have covered in this area of the syllabus. It is very easy for this to be a bigger question within section C for you.